Hello, and welcome back to my channel, The Midlands Investor, your one-stop shop for all things investing and personal finance. Beating the Street is a well-known book written by Peter Lynch, a renowned American fund manager who managed the Fidelity Magellan Fund from 1977 to 1990. Lynch's career at Fidelity was marked by exceptional returns, making the fund one of the most successful mutual funds in history. In his book, Beating the Street, Lynch shares his investment philosophy and strategy, providing valuable insight into his approach to stock market analysis. The book provides a comprehensive overview of his investment strategy and is aimed at individual investors who want to mimic this and maximize their own returns in the stock market. His approach is based on his belief that individual investors have a unique advantage over professional fund managers in that they have first-hand knowledge of the products and services offered by companies they are familiar with. He argues that this knowledge can be used to identify companies that are poised for growth and provide attractive investment opportunities. So, without further ado, let's kick off with the introduction. As I've already mentioned, Peter Lynch is an American investor, author, and former fund manager who is best known for his success during his time at Fidelity. His investment philosophy, which emphasizes the importance of investing in what you know, looking for growth stocks, ignoring the market, and taking a long-term approach, has inspired investors around the world. In his book, Beating the Street, he shares his insights and practical advice for individual investors looking to build a successful investment portfolio. This video will explore the key concept of Lynch's investment philosophy, as well as his practical advice on analysing individual companies and building a diversified portfolio of investments. Lynch's investment philosophy is centred around several key principles. First, he emphasises the importance of investing in what you know. This means that investors should focus on companies and industries that they understand well. By doing this, and investing in companies that they're familiar with, investors can better evaluate the company's business model, competitive landscape, and growth potential. Another key principle is the importance of looking for growth stocks. Lynch believes that investors should focus on companies that are growing their earnings at a rapid pace. By investing in these companies, investors can benefit from rising stock prices and increasing earnings over time. He goes on to explain that you should also ignore the market. He believes that investors should not be overly influenced by short-term market fluctuations, but instead should focus on the fundamentals of the companies that they are investing in. By focusing on the company's financial health, management team, competitive advantage, and growth potential, investors can make more informed decisions that are less influenced by short-term market conditions. And finally, Lynch emphasises the importance of taking a long-term approach to investing. He believes that investors should not be focused on short-term gains, but instead should be patient and focus on building a portfolio of investments that deliver consistent returns over the long term. In addition to outlining Lynch's investment philosophy, Beating the Street also provides practical advice for investors looking to analyse individual companies and build a diversified portfolio of investments for themselves. One of the key concepts is Lynch's approach is the importance of doing your own research and analysis of individual companies. He emphasises the need for investors to evaluate a company's financials, management team, competitive advantage, and growth potential before making an investment decision. By doing their own research, investors can better understand the company's business model, competitive landscape, and potential risks and opportunities. He then goes on to explain the importance of diversification in building a successful investment portfolio. He advises investors to spread their investments across different sectors and industries to reduce their exposure to individual company risks and market volatility. By diversifying your investments, investors can build a portfolio that is better able to withstand short-term market fluctuations and deliver consistent returns over the long term. He goes on to explain that you should keep your emotions in check when making investment decisions. He cautions against being overly influenced by fear or greed, and instead advises investors to focus on the fundamentals of the companies they are considering investing in. By staying disciplined at doing this and avoiding impulsive decisions based on short-term market conditions, investors can build a successful investment portfolio that can withstand market volatility and deliver consistent returns over time. Finally, the book also provides further practical advice for investors, saying that investors should pay attention to a company's earnings growth rate, price to earnings ratio, debt levels, and dividend yield when evaluating potential investments. By evaluating these factors, investors can better understand the company's financial health and growth potential and make more, better informed investment decisions. In conclusion, Beating the Street provides valuable insights and practical advice for individual investors looking to build a successful investment portfolio. Lynch's investment philosophy emphasizes the importance of investing what you know, looking for growth stocks, ignoring the market, and taking a long-term approach. His practical advice for analysing individual companies and building a diversified portfolio of investments provides a roadmap for investors to follow in making investment decisions. Investing can be a complex and challenging process, but by following Lynch's investment philosophies and practical advice, investors can build a successful investment portfolio that may somewhat replicate his. By investing in companies that you understand, focusing on growth stocks, ignoring short-term market fluctuations, taking a long-term approach, diversifying your investments, and keeping your emotions in check, you can build a portfolio that is better able to withstand market volatility and deliver consistent returns over time. The book provides valuable insights and practical advice for individual investors looking to build a successful portfolio. And that's it. Thank you for watching once again. I've been the Millions Investor. Don't forget to like and subscribe if you enjoyed this content, and I'll see you again next time.